Next and finally is Naspers. Okay, we all know Naspers because it is the owner of the MultiChoice platform, DSTV, that you're watching now. But of course, its major asset is Tencent, which is a social media business, probably better than Facebook, but exclusively in China. Better than Facebook because it's got a higher revenue per user and it's done more in regard to monetization of its QQ and its WeChat platforms. Price to earnings ratio similar though to Facebook, 95. Market capitalization 714 billion rand. Okay, so if you divide that by 13.6, you get back to a business which is clearly smaller than those global players.
Sure.
Dividend yield a rather paltry 0.28. So you don't own these for the dividend. In addition to those assets I've mentioned, though, they've got all sorts of others in India and China and Turkey and Eastern Europe and so on and so forth. How do you view Naspers? 1,700 rands a share?
I'm actually still shocked that they pay a dividend given how much...
Why bother?
Well, and how much cash the business actually needs for the e-commerce platform in particular.
Yeah.
So yeah, that's just a side comment. Look, a phenomenal business. I think the 7th largest internet business in the world, which is not a stat you must laugh at. That's pretty impressive. I think we all know the Tencent story. I think the particularly exciting business going forward is the e-commerce business.
So that's all e-commerce businesses that, when you say e-commerce, it's online shopping and classifieds and related stuff where people buy. Takealot.com, Kalahari, Flipkart, all of those
businesses around the world, right? So they're looking for their platform, or they've got investments in India, all around emerging markets across the world. We know that the Chinese market in particular is the largest e-commerce platform, but they don't really have e-commerce exposure in China because that's not what Tencent does.
But they've got that JD group thing, which is a secondary holding in a minority position.
But ultimately, I think going forward, the big growth in terms of revenue and ultimately earnings is going to come from e-commerce.
Well, let's talk about that. So what you're talking about here is an investment holding company that owns all of these things, and they're all doing well. And as you say, they're sucking cash, a lot of them. But at some point in the future, do you think there's going to be a reorganization, unbundling, or do you think Naspers will always just be this vehicle through which to enter these underlying assets? Do you think they'll sell some of them off to trade buyers?
They've been successful by utilizing that business model. Who would have thought what Tencent was 15 years ago or 10 years ago when they originally bought it? So I expect a continuation of that sort of theme going forward.
Hot or not?
Love the business.
Yeah.
I really do. Very bullish on it operationally. I think revenue growth is going to be superb going forward, and earnings growth, but not as superb as the market thinks, in my opinion.
So you wouldn't be owning them at this point?
Not at this point.
Okay, I'm going to go with hot, like the Naspers. Own those in the hot stocks portfolio.